Let's say hello to our new friend, Chris Funk. How are you, Chris?
Great. How are you, sir?
Awesome. Great to meet you. Been at your office today, got the tour, met your team. Very, very impressed. Before we talk about what you guys do, let's talk about how you got into the real estate business.
Sure, absolutely. Well, it all started right after the crash. So my father and I were in the dry cleaning business prior to getting into real estate. And as with most businesses, at the downturn, we lost about 20% of our revenue.
Yeah.
So we decided we needed to really look into some cash flow opportunities to get us through that time. And so fortunately, we had a nest egg of some cash set aside, and we went out and we ultimately bought about 25 houses. So back then, it was there was plenty of inventory, plenty of supply of houses. They were dime a dozen.
Well, and the other part of it is because of the crash, not everybody saw that we were at the bottom, and this made sense. A lot of people were shying away from buying, and you guys saw the opportunity to say, hey, we could put some real estate in our portfolio, and it's kind of on sale right now.
Well, exactly. And really at the time, I wish I could say that we were, super smart and knew that it was going to come back, but, we were just looking for cash flow, you know. So, we saw, all right, well, we can buy these houses, we can renovate them, we can rent them, and we can live off of the proceeds from the rental income. So that was really how it started. We then decided that we would tell some friends and family about, everything that had gone on and, how well that portfolio was doing after we'd renovated about 25 houses. And so as it naturally happens, people are looking for deals, particularly in that time because everybody was running scared. So the yield side of that business is really what brought everybody out of the woodwork. And so we ultimately built a portfolio of about 125 houses with our money and friends and family money. And we decided, hey, it's great. Cash flow is great. And there's plenty of supply. So let's see if we can sell this and do it all over again. And at that point in time, there was still so much blood in the streets that the institutional investors were not ready to pay any sort of premium for renovated product. And we, of course, knew how much time, effort, and energy we put into buying the property at the foreclosure steps, renovating it, leasing it. So we weren't about to sell it for our investment basis.
Sure.
But so through that process of trying to sell these properties early on, we got introduced to a great group of guys out of New York that supplied us with a lot of capital that really spurred our growth.
Well, it's a great example of just how business works. You go out and you prove a concept, first by buying some houses in your own portfolio, bringing on some friends and family. Now you have enough homes that at least you can say the market works and this model works. And now you just add additional capital and you guys are able to expand quite impressively.
That's exactly how it happened. So we did a fee-based development for this New York group, and things went very well. And it was a rapid growth for us, as you mentioned. We went from buying 50 houses a year to buying 50 houses a month. Yeah, and it really. It really made us scale out quickly, scale out our property management services. As I told you during our tour earlier, the property management was really the area that we struggled with the most in the beginning because we couldn't find anybody that really we felt had our best interests in mind,
Always a challenge. You buy a property based on the market and there's a good tenant base, but someone's got to lease it up. Someone's got to make sure the tenants pay. And I would think most of our listeners, that's not them, right? Especially, I like to say live where you want to live and invest where the numbers make sense. You don't have to buy in your backyard if you don't have a great backyard to buy in. But someone's got to do the work, and love property managers who do a good job. There just aren't enough of them, it seems. And I know you guys struggle with that a little bit to the point that you decided you'd get in the business.
We did. And it was, at the time, it was really, again, out of necessity. It wasn't something that we had grand plans of building a large property management company that we have today, but it was necessary because we could not operate the rental investment model without having good property management in place.
Now, another thing you guys have done, and we'll talk more about property management before we're done because that's important. In fact, we're going to meet your general manager and learn about that side of the business. But let's talk about how you find more inventory, because at first, properties were everywhere. There's blood in the streets. As that's changed, you've now actually gone to a model where you're building property for investors to own. Talk about that part of it.
Yeah, exactly. So as the inventory started to go away, we realized that there was such an opportunity still in this asset class. And, we figured out where the weaknesses were of what we were doing, which is the older construction homes, which is still, bread and butter in our business. But they come with maintenance and, some additional costs that come with owning a house that was built in the 1950s.
Yep.
No matter how much you renovate that house, you're still going to have more maintenance than you are in a new construction house.
Sure.
So as the market started to increase, we started to take a look at building new homes. And what we found is that, a new home on a gross rental yield basis may be less attractive than an older construction home from a gross rental yield perspective.
Right.
However,
Just so no investor left behind, a home that you buy on the resale market, you guys do a little rehab in, the disparity between what it rents and what it sells for is going to be different on a brand new home. Brand new home, you're buying the land and subdividing and new utilities and construction. And so the rent ratio might not be the same.
Exactly. So the gross yields were, probably 3 to 4% spread.
Mm-hmm.
However, because the new construction homes come with such limited maintenance cost, the net yields were within 0.5% of each other.
Okay.
And so, what we determined was, well, hey, now we're in a market where it makes sense to build new construction homes for rent. And everything up until that point, we had been buying homes based on the discount to replacement cost.
Yep.
that we were seeing in the market. Well, when there was no discount to replacement cost, then it made sense to build. So long story short, we started buying land positions. And the reason that we bought land positions as opposed to lots is most of the distressed lot inventory in the Jacksonville market was gone. So while the other national builders were building through that product, we had to go develop our own lots to have inventory to supply for our investors to buy homes. So if you don't have land, you can't build a house.
Well, and I think one of the things people don't understand about new construction is you don't just finish the last house and then start looking for a piece of land, right? You have to be doing that in advance. There's the whole entitlement process and utilities and dealing with the cities and the counties and all that. So there's a lead time.
Yeah, it's about 1.5 to 2 years that it takes from the time that we identify a property through rezoning that property so that we can actually develop a subdivision, because most of the plots of land you find aren't zoned properly.
Right.
And then there's another 6 months of engineering that has to take place. The counties and the states are very particular about their water and their water management districts and their development standards, which is why we have such great infrastructure in the United States, is because they go through the time and effort to make sure that we're doing it right.
Yeah.
But it is time consuming. So we ended up doing acquiring a lot of land and going through this process. So we really stepped out on the limb about as far as I like to go when we first got into the new construction model, because we had to buy a lot of land that we were 2 years out from ever even being able to build a house on.
Yeah. But that's part of seeing where the puck is going, right? Realizing that there was a time when you could buy below replacement cost. You can't build then. But now there is a demand, and Tennessee has been strong and so forth. And when you can control the cost, it's this debate we always have with investors. Like the bird in the hand, I can buy a house that exists today and I can have an inspection done. I know its structure and everything's set. But when you build it from the ground up, you have 100% control over everything.
Exactly. And that really, you're hitting on the key component that we love so much about new construction, which is we know in our older construction homes what the highest expense items are. So give a turn in an older construction home that maybe has carpeting in the bedrooms. Well, you're going to spend $1,500 to $2,000 replacing that carpeting on a turn.
Yep.
And very rarely are you able to keep that carpeting into the next tenant. And if you are, it doesn't look brand new. So when we do the new construction houses, we put vinyl plank floors throughout everything. So
which look great, but they wear better from a tenant perspective.
Exactly. The tenants walk in, they're faux wood planks. The tenants feel like they have hardwood floors throughout the entire house, which is a huge selling point for our leasing agents. And they wear. they wear for a very long time. And if the tenant somehow manages to damage one of the panels, you can pull one out and replace it for a couple bucks instead of having to replace the whole room for it.
It's hard to do, but some tenants can figure it out. They can figure it out. For sure.
Yeah, so true. We've definitely seen some things that made us scratch our heads.
Now, let's talk about new construction from the point of view that that's something that's attractive to tenants, right? Tenants see that, but also to owners. If we look at an appraisal, we see the age life method of the property is after some point, it's going to take more to keep it up, and eventually the house is going to wear out. I buy a new house, that's a pretty good place to be as long as the numbers work. But when you guys are building, you're building specifically to a tenant base, and yet it's probably obvious, but when a builder builds to sell to an owner-occupant, they can make more money than when they sell to an investor. So help us understand how it would make sense from your company's point of view to sell most of your inventory to investors, even though you might not make as much money.
Sure, absolutely. So investors have been our lifeblood ever since we started in our real estate business. Yeah. We are investors ourselves, and we built our property management company as a company that is built by investors for investors. So that's where we feel most comfortable. And I personally feel most comfortable having a conversation related to yields as I do maybe something more frilly about,
which way the sun comes in the window in the morning.
Exactly.
Yeah.
So it's part of it is just a comfort level of myself and my father. We're pretty analytical folks, and so it's easy to talk to analytical folks, and those are investors.
Yep.
But from a profit margin perspective, why do you do that? Well, we look at it from a long-term perspective. Every property that we sell, we want to maintain management of that property, and we want to become part of the family of that investor. And we want to be there for them, whether they buy properties from us or somebody else. We want to be there to manage those assets for them, no matter where they come from. So our end game is really a much longer term objective. We don't want to just sell a house and go away, which is what most traditional builders would do. We want to be there in the long run, and we might not make as much up front, but we'll make a little bit of money with you every year. And we look at it, if the investor is making money, they want to continue to have us manage the property. We can make a little bit of money that way, and we can all be happy for a longer period of time.
Yeah, I think it's a key thing for our listeners to understand that, because a lot of real estate transactions are just transactionally oriented, right? Hi, how are you? List my house, and they're on to the next city. But investors do more business more often. So even though you might make a little less per transaction, you're building up long-term business, which is good for you guys, but it's also good for the investor. If I know I can count on you and you've got 2, 4, 8, pick a number of properties in that you're handling for me, that's the kind of relationship people are after. And, as Russ and I talked about before we had you on, you didn't come looking for us. We didn't come looking for you. We got referred to you guys from one of your raving fans, which is our favorite way to meet people that we call providers in our world, that someone says, hey, these guys are doing a great job. So part of that great job is making sure that the house works in terms of ownership and care and so forth. And then second is the management. So let's talk about kind of the range of price and rents and so forth in the market. Someone who's never been to Jacksonville, what kind of are the parameters for both the resale houses that you guys do and the new construction?
Sure, absolutely. So, I can start with the resale houses. And right now, we are not buying at the foreclosure steps anymore. The inventory has gone away.
Yep.
So most of our resales are typically investors that we are managing for or that we know in the market that are looking to trade portfolios.
Yep.
So, which honestly I find to be great for the investor buyer, because it's a tenanted property. Because right now, so much of the trade force, the labor force here in Jacksonville has gone to new construction, that it's hard to find folks at a reasonable price to renovate houses
Yep.
in the market today. So, really the only reason that an investor would want to renovate a house and go through all the pain and, blood, sweat, and tears of that process is if they're going to be in the house at a lower cost basis. And what we're finding is that folks that renovated houses 2 or 3 years ago are still at a lower cost basis than you could be today if you were buying that foreclosed house and renovating it yourself.
Yep.
So most of our transactions related to what we would call older construction product revolve around investor-to-investor sales. So it's not something where we're selling, which we're happy to have our agents get involved and make those connections, and we do that every day.
Yep.
But just for clarification, that's not something that we're even able to provide new product for. It's more product trading amongst our friends and other investors.
Yep.
In regards to pricing of those of that product, it's trading really obviously depends on the rent and the area that the house is in. So everything's location. So I would say probably the lower priced houses are somewhere in the $50,000 to $60,000 range, and of the older construction, and maybe up to $140,000, $150,000 in some of the higher rent neighborhoods. And then getting into new construction, the new construction is all over the board. So we build not only single-family homes for new construction, but we also build duplexes, triplexes, and quadruplexes. And really, each of those is for a different investor. So, a single-family home that we build for rent, we're typically building that in a neighborhood where we're also selling some houses to retail home buyers.
Sure.
Retail home buyers aren't really our main objective, but if we're building a 40-house subdivision, maybe we only want to sell 15 or 20 homes to investors so that it's not a complete rental neighborhood.
Yeah.
And so that forces us to sell the rest of the houses to retail home buyers, which, as you know, is not always our favorite thing to do.
Right.
But it helps keep the values up long term for our investors, because those retail home buyers will then be selling that home as the market increases, and it's driving up the comps in the neighborhood for our investor buyers. So if they decide that they want to get out at some point, they'll have the opportunity to sell to a retail home buyer from their investment product. So I would say that's the biggest benefit of our single-family homes. They have single-family new construction homes, I should say. They have a slightly lower cash-on-cash yield than our multifamily product, but it's a home that can then be resold to that retail home buyer. So you have a much greater chance for appreciation and market appreciation. Our quadruplex product is really, it's an investment, so it's an investment grade real estate asset. That's what it's always going to be traded at.
Yep.
We get some economies of scale in building those. They're larger buildings, so the mobilization fee gets spread out across more square footage. We are able to typically do a little bit more density in the quadruplexes, so the land cost gets reduced slightly, all of which then results back into a higher yield. So the cash-on-cash yield for any of the multifamily is a little bit higher than the single. But, you're giving up some of that appreciation. You may get some appreciation from market and, caps getting compressed, but it's not going to be as drastic as you would get in a single family home.
Well, it speaks to your exact point, which is the different products for different types of investors. If I'm primarily an equity investor and I see, hey, this market makes sense, new product tends to go up over time, I'm going to have a 5-year hold and sell. That's different than someone says, no, I want to put a bunch of fourplexes in my portfolio and hold them forever.
Exactly.
So it's great that you guys have both of those things. And price range for the new single families, what does that look like?
Sure. So in the Jacksonville market here, anywhere from $150,000 up to about $200,000. So we do everything in our power to keep those prices under that $200,000 mark. That just seems to be a ceiling that people like to stay below when buying a single family investment asset. And it also enables that investor to then, take advantage of that kind of second home move up market, which is really the market that we buy in, the areas that we buy and build in later down the line. And from a duplex, triplex, quadruplex standpoint, it goes up from there. I think the highest priced quadruplexes that we have in Jacksonville right now are about $550,000.
We're in Jacksonville, Florida today, talking to Chris Funk. One of the most important things in owning any investment property is management. We come back, we'll talk property management. And we'll also play real estate trivia next. You're tuned to the Real Estate Guys radio program. I'm your host, Robert Helms.
Live nationwide, you're listening to the Real Estate Guys. Find out more at realestateguysradio.com.
Hi, this is Garrett Sutton. Robert Kiyosaki's asset protection attorney and the author of Loopholes of Real Estate and Start Your Own Corporation. As an American or foreign-based investor in U.S. real estate, you know we are a litigious society. You know that you need to protect your real estate, paper, and bullion holdings with the right mix of LLCs and corporations. Our firm, Corporate Direct, not only forms these entities, but importantly, we properly maintain them too. If you fail to follow the corporate formalities, you can lose it all in an instant. Corporate Direct is your source for LLC protection and maintenance in all 50 states. Visit corporatedirect.com or call 800-600-1760. Mention the Real Estate Guys for a free bonus. That's 800-600-1760 or corporatedirect.com. We look forward to assisting you at corporatedirect.com.
Forbes rated Memphis the best cash flow market in the nation. And our good friend Terry Kerr at Mid-South Home Buyers has been the premier turnkey rental property provider in Memphis for over 13 years. With an A-plus rating from the Better Business Bureau, Terry has renovated over 750 houses. Real Estate Guys listeners have snapped up hundreds. Discover what these satisfied investors already know. Mid-South's properties are completely renovated with a 1-year warranty and a lifelong rental guarantee. They're affordable, well-managed, and easy to own. Perfect for beginning investors and veterans alike. Get in on the action. Contact Terry and his team via email at midsouth@realestateguysradio.com.
Hi, this is Frank Holmes, Chief Investment Officer and CEO of U.S. Global Investors, and you are listening to The Real Estate Guys.
Welcome back to the Real Estate Guys radio program. Thanks for tuning into the show. Hey, just a few cabins remain for the 17th Annual Investors Summit at Sea. If you're going to go with us, you got to decide quickly. Get to the website at realestateguysradio.com and check the button that says Summit at Sea. We're in Jacksonville, Florida today with a market spotlight talking to Chris Funk. And in a minute, you'll meet his general manager, Chandler Janger. She handles all the property management for the many, many properties that they sell here. Before we get back to that, it's time to play Real Estate Trivia. Your chance to win a prize by knowing today's Real Estate Trivia question. Of course, it's going to have something to do with Jacksonville. As soon as you hear the question and think you know the answer, send your best guess to trivia@realestateguysradio.com. That's trivia@realestateguysradio.com. The first person with the right guess wins a copy of Second Chance by Robert Kiyosaki. Last week on the show, we had CPA Tom Wheelwright, and we asked this. Maricopa County in Arizona is the state's most populous county, with around 60% of the Arizona population living there. Which Arizona county is second in population? Well, the answer is Pima County in the south central region of Arizona. The vast majority of the Pima County population lies in and around the city of Tucson, and Pima represents around 15% of the state's population. Here's our real estate trivia question for this week. Jacksonville, Florida was known by a different name until 1822. What was it? Yeah, what was Jacksonville called before it was called Jacksonville? If you think you know or just want to take a guess, send your best guess to trivia@realestateguysradio.com. Trivia@realestateguysradio.com. Include your name, the answer to the question, and your mailing address so that if you're the winner, we can send you a copy of Second Chance by Robert Kiyosaki. That's today's real estate trivia question. Now, one of the things we haven't talked about yet is the very market we're in and why it makes sense, Jacksonville, as a market to consider for someone who's looking for a place to own rental property. And maybe you can kind of hit the high notes on what that's about. You've prepared a great report. Before we're done, we're going to invite the listeners to learn more and find out the details. But just kind of the high notes about why Jacksonville makes such good sense.
Sure. So Jacksonville, like much of Florida, experiences fantastic growth year over year. So you might not know, but Jacksonville has had a double-digit population growth every census since censuses have been being done.
Yeah.
Which is great. That's great for Jacksonville. It's great for all of Florida. But the thing that Jacksonville has that a lot of other parts of the state don't have relates to our jobs. So we are really a working city. When you come and you tour some of these properties and you want to see some of the houses that we have under construction and you're driving around town, you see people are doing something. You know, it's not a town full of retirees. We've got a very good financial services district, so companies like Fidelity National Title, Ameris Bank, Wells Fargo, all have major corporate offices here in our city. We have a huge industrial side of our city, so we have one of the largest ports on the East Coast. Companies such as Coach have their worldwide distribution center here. Mercedes has a large distribution center. FedEx has a huge distribution center. I could go on and on with names that you would recognize, which really is driven by our port industry. And then we have a huge military presence. So we have both NAS Jax and Mayport here in Jacksonville, and they're here to stay. So these are not military bases that are declining. They're expanding their ranks. So for all those reasons, I think Jacksonville is a great place to be.
And Chandler, how does that translate on your side of the business? Who are the folks that are generally renting the homes that you have? I'm sure it's a wide variety. You have a lot of different types of products, but who are the folks that you guys see as your main tenants?
Well, you're right. We do have a wide variety. I'm happy that we do. But if we have to generalize our tenants, or the tenant base pool would be middle to upper middle, working class Americans. From teachers to the military, medical professionals. We have a huge Baptist hospital. It's a very beautiful spot downtown on the water. So those are who we're seeing come in and lease our average home that we have on the market.
Awesome. Now, let's talk about just some of the things that people often have about questions, like what about how much the security deposit is, and do you allow pets, and those kinds of things?
Oh, absolutely. Generally, our security deposit is equal to whatever the monthly rent is. So based on credit qualifications, we may require 2 times security deposit to secure the home. However, on a general basis, it's just 1. Whatever we don't do first and last. It's to move in, you have to pay your rent or prorated rent, and we have to have the security deposit on hand. Most of our homes, unless the investor specifically says otherwise, does accept up to 2 pets. We get shot records and pictures of the pet to put on record to make sure that, it's for insurance purposes for the owner. We don't accept any pet that's on the Florida aggressive breed list. Many property managements are pulling away from that and accepting all pets, but and that's us for right now. That's how we are set up. And it is a $350 non-refundable security deposit that the tenant has to pay. And that will obviously go on to the owner's account once it's paid, and they get to keep that. So.
Okay, so it's like a pet fee.
Yeah, we don't add to the monthly rent at this time a pet fee. It's just a base up to 2 pets.
Now, as we talked earlier, you're a member of the National Association of Residential Property Managers, which is one of the things we suggest people check when they're talking to property managers, because, as we talked earlier, the variety and quality of property management is amazing. In my estimation, it is the most important job. I mean, I want to make sure I have a great property. I want to make sure it's built well and it's in a good neighborhood, but the rubber meets the road at property management. And so one of the things that you guys have hit on is by keeping that in-house, that helps you control the entire experience for the investor. So what is that experience like? How often do they get reports? When does the rent come in? Talk about those kinds of things.
Oh, absolutely. So once they're onboarded, they will as soon as we send a welcome email, and it really is a review of everything that we've talked about. If we're looking for some documents that are still outstanding, that'll be there. There is a link that is sent with that welcome email that the owners are able to go onto their owner's portal, which I like to call it a 24/7 online filing cabinet for the owners with property management.
Right.
Everything that they need that they've ever sent me or anything to do with their tenants is there. So if they send me their insurance document, it's uploaded and they can access it at any time. So their management agreement is there. The lease agreements are there. They're able to look there. Their delinquency report is there, whether it's delinquent or not. If the house is occupied, they're able to log in and see if the tenant's paid. And if they're not, if there's any scheduled payments coming up, and then the notes that the either collections or portfolio manager has put in there. So I really wanted it to be available to them so that they can log on and go, oh, they've got this.
Yeah.
That's really what I want, because if you're going to invest, and this is what you do, we want you to have peace of mind. we recognize that a property management company can make or break your investment. And we want to make it, because without you being successful, we aren't. Back to your actual question, which is what else did they get? They also are sent, investors are also sent a weekly report from their portfolio manager. So though they can get online and see that, it's a snapshot that is sent to them if they're not logging onto their portal. So they're also getting an email for their vacant and occupied properties stating it's vacant. Is there a deposit on it? If so, when is the scheduled move-in? Or this tenant is paid. This tenant actually isn't paid, and here's why and what the notes are on that. Obviously, if they have any questions, they can use that portal to email, to send a message to their portfolio manager and have a conversation that way. But they also have they will have their contact, the portfolio manager's contact information, their phone number, their email. There shouldn't be a shortage of how to get a hold of us.
All right. So sounds very user-friendly from that regard. And the fact that with as many investors as you guys have, there are some people that want to be communicated all the time. And there's some people that just want to have the money deposited, right?
Right.
So talk about that part, because you guys have a collection process, and we talked a little bit about eviction and so forth, but that's going to be the exception, not the rule. When did they receive their money, and how is it accounted for, and all that?
Well, they also get a monthly statement. So we pay our owners the month after rent collection. We do that for accounting purposes and collection purposes. I don't ever want to promise the owner that the tenant's going to pay on time, because on those moments where they don't, then now I've got an upset owner. So my whole drive is to not upset an owner, and to, again, I keep reverting back to the expectations, to set that up properly. So we do give ourselves in those times where we have to collect, that month to collect. So the first week after rent collection of the next month. So in January, the owner is paid the first week of February. They're paid electronically. And once that, they get an email notification that payment has come through, and they can expect it into their account 3 to 5 business days. At that moment, also a statement is uploaded. So they're able to then that email goes to them as well, and they can look at their statement. It's broken up by property, so they know what income came in for this property, what expenses were for this property, and so on and so forth. And then it generalizes it in a summary as well. Management fees are broken out, so they know exactly what they've been paying. Again, we really want an investor to have peace of mind, and we really have tried to make sure that we've set up the business that way.
Awesome. Good stuff. So you deal with a lot of investors. What are the things that you wish investors knew before they come to you guys? Are there any frequently made errors, or what are the things that you'd love investors to know before they pull the trigger?
I have one.
Oh, go.
I love clear communication. I love being straightforward and honest. We do manage a lot of properties and a lot of owners. So when it comes to their portfolio manager and contacting them, one of the biggest things is setting up the expectation to allow them up to, but no more than 24 business hours to get back with them. Okay. This business is property management, and anybody who is in real estate understands that it has a lot of moving parts to it. So on the weekends, I really want them to take that time off and refresh and come back ready to do it again the next week. So that's why I say the business hours. If they want to work on the weekends or into the evening, that is their choice. But I like for the owners to understand we want to look into it, and we want to have time to reply to them individually and not be in a rush. So that's one of the biggest things for me.
Great.
I'm a spreadsheet nerd. So, I really, and it goes back to expectations. I really like to know that whether they're doing it with us or whether they've done it before they come to us, that they've done a pro forma on the investment that they're making. Real estate is one of those where you can make a lot of money. I mean, there's probably more millionaires that are real estate investors in this country than any other business. But it's also it's a business of nickels and dimes. So and we need to understand that going into the process. Particularly for our investors that are using leverage. Leverage is your friend. Particularly in this market. With our still historically low interest rates. I mean, we all complain interest rates go up a 0.25% here and there, but we're still probably at historically low levels of interest rates. So But for our levered investors, I really want them to know what that cash flow is that they can depend on when they make that investment, that it's going to come in, but also understand that a big portion of their cash flow is actually increasing their net worth by the fact that it's reducing their loan balance every month that goes by. I think that's one of the areas that I just like everybody to be fully aware of as they go into this. It's not this is not a get rich quick scheme. Real estate business is not. You will make a lot of money in the long run, but it is a long run sort of game.
All right, good stuff. Well, if Jacksonville sounds interesting to you, you guys have prepared a really cool report. I read through it, and a lot of good information about the marketplace. And of course, that'll also give you their contact details. You can find out what it takes to get on the list for new houses, resale houses, duplex, triplex, fourplex, and of course, if you've got a property already in this marketplace, your property management arm completely separate from that, so that's something you talk to folks about as well. So all you're going to do is, if you're interested in that, send an email to jacksonville@realestateguysradio.com, jacksonville@realestateguysradio.com. You'll get that report. Thanks so much, Chris Chandler, for being on the program today.
Really appreciate you coming. Thank you so much.
Thank you for having us.
You're tuned to the Real Estate Guys radio program. More when we come back. I'm your host, Robert Helms.